Okay, nice and fast this time. So what we're looking at here is Tesla on the weekly chart. So each one of these bars represents a week. And as you can see, we're just going back to October, well, there's 2011. So we're just all flat, and then we get our first nice long wave up. And what that means in Fibonacci stuff is there's 5 waves that complete a cycle. And so we have this first wave up to this point, 196, which then we hit a high and then we start going down, right? And then we hit a low of 115. So what we do is we run what's called a Fibonacci retracement from the high to the low, and it's going to give us some percentages, and then we have our targets, right? So we have a target of 1272%, 1618%, and 2618%, and actually all the way up at 423.6%. And that is just a percentage based off of your high to low, 0 to 100%. So our first target was 216.32 right here, and as you can see, we just moved up from that point. Now, if this stock came up, right, and at this 50% retracement, usually it comes up, right, and then bounces, comes down, right, and will bounce off the 23.6 and then move up. Now, if this stock came up and moved down and past that, right, this pattern would be negated, and this whole, all these targets would be worthless. So, if support's broken or things move not according to your plan, basically, if something is broken, it everything is meaningless. All these lines and stuff are meaningless. And let me show you, show all drawings. I mean, I took most of these off right here, so there's very little drawings on my scale. And then, so we had, right, we had that, put that there, and we moved up. We came all the way up to the 1618% retracement. We broke above that and we came down and made a new low. So now we have another high, new high, and then we have a new low, right? But it bounces there and then starts going up again. So we start moving up. So we then run a new retracement line. Boop, down there. And that is where we first got I'm just going to hide that one. That's where we first got our target, right? When I said 288.88. Well, as you can see on the today, right, we came up in the overnight session 288.77. So we are 10 cents off that high. We came up, we actually hit 288. We came flying down just for some relief because of all new time highs again. And then we've rallied since then to 282.75. We're down a little bit, but this rally will probably continue, especially if we go back to this weekly chart. We can still see we're on that up momentum. 1, 2, 3, 4, 5. This will be week 6. No, that's week 5. So usually this goes in weeks of 8 when we get this squeeze going off. So this is very strong stock. So why did I say 320 target goal? Well, because now we have not only the Fibonacci retracement of 2618 up here, we also have our Fibonacci retracement of 1618 from here, from this new line, which gives us a cluster of about $320, right? So last time, I mean, this went screaming through and hit the 1272 and then burst up to the 320. Will that happen again? I don't know. I think this was earnings, not sure. However, whatever happens, right, there's going to be a violent pullback. And why do I say that? Is, sure, we'll move all drawings. Is from this point, 195, 196 to 115. is 196, 195, whatever, to 1114 is 81. 81 divided by 196, 195, whatever it is 41%. So we had a 41% pullback from our high, boom, all the way down. And then from this one, I think it turns out to be 30 something percent, 32%. So on average, it was a 36% pullback, right? So if we're gonna have a pullback, we're gonna take 36% of 288, or let's even just take 30%. So $86.40 pullback from here. So that would put us just about at 200 bucks, which comes to right about here, which is not a bad thing. It wouldn't be a bad pullback. As you can see, this pullback right here put us below the last high. So another pullback would put us below this last high, and we could really find support at 235, even support at 244. So that's kind of my targets, but be prepared if the stock market did fall, right? We're going to have a huge downdraft, right? If for something did happen unexpectedly. So that's what you do have to prepare for, is those quick pullbacks. They're really fast and they thrash you around. And so basically, if we go to this daily chart, right, we can see things work in wave fives. I didn't explain this. So this is wave 1, wave 2, wave 3, wave 4, and then wave 5 would be this high. And so the question is the high in or not? We don't know. However, if we break this down to a daily, we're still on wave 5. So we go from 265, come down, we go up 1, 2, 3, 4, and then 5 is up here. And this kind of is called ABC, and you know, you get a pullback at 50% pullback from a move, and then it's going to burst up and above, and that's what it did. And so that's what we call 5. And so we're looking for a 3-day wave down move, and that would put us back probably at 264, right below this low, or right at this low, to fill all these gaps. So I could see a pullback happening pretty quickly and then bursting up to those 320 levels. And as you can see, here's my trade. I shorted Tesla this morning. I risked 260 to make 240, so it's just a move that I did. But I'm also looking at an iron condor and really looking at 44 days out to really kind of put a circle around this other position. So 1 standard deviation out, if we look at this, we're going to move this to analyze, and we're going to go boop. So 1 standard deviation out for October. All right, I have to move these around a bit. So 320 on the top side. So it'd sell 320, buy the 325, and it looks like we'd sell the 345 now, or 245. We would sell the not traded, bummer. We'd sell the 250, let's say, and buy the 245, and that would put us in our 1 standard deviation, really. So that's what this 1 standard deviation looks like. It's these darker areas, right? So so that's kind of what we're looking at. There's a 16% chance for it to get there, and In that meantime, what you could do, as I was always saying, I know you only have 50 shares, but let's just say, you did have 100 shares, right? So you come to next week, which is 9 days out, and you buy a covered call. Well, if you already had 100 shares, you sell a covered call. You would sell this 285 for 535, right? So you collect $535, or you can collect $430. If you collect the 430, you collect less, but if it moves up, you're gonna make a little bit more money. And we can go into analyze that too. Buy covered stock, analyze. And your max profit would be $848. If it goes down, you are collecting $430. If it did make that huge drop, right? Say it made a 30% drop, so 288 times, well, let's just say it went 36%, 103 times 100. So you could lose $10,368 on a 10% on a 36% drop with 100 shares. If you were to average $400 on a covered call 1 week out, do that times 52, you're pulling in $20,800. So you're bringing your cost basis down, which you already have your cost basis probably at 255. 20,000. Let's say you have it at 25,500, right? Minus 20,800. Your cost now turns into $4,700. That's basically like having a rental unit and collecting rent. So your cost basis for the rental unit, again, $20,800, right? And at $400 a month divided by 20,800, you're making 1.9%. But if you did that, let's see, annually, 20,800 divided by 20, what did I say, 24,700, something like that. Right, so that's yearly. You're making 84% a year. So that would be, that's a return on your money. So that's how I look at these covered calls. And I'm actually thinking, so I've been doing covered calls in T, and looking at these, I collect 23 cents versus Tesla is 24 cents, right? So 100 of these is $3,400. So I'm collecting 23. If I was doing 1,000, of these, so times 10, that's $230 I'm collecting, right? So for $34,000, I'm still not collecting what we'd be collecting in Tesla at $400. Does that make sense? So 23 bucks, right, times 10. I'm still only collecting $230 off of AT&T covered call, and that's at putting in 34,930 bucks. So 240 times 52, 12,048 divided by 34,930 is only 35%. So I'm actually in the wrong trade here when I look at it, doing covered calls. What I do get though is I do get a what are they called? Dividends off the stock, and that's what really helped me too. So looking at my account, I'm probably going to do something different for covered calls. So I just wanted to put that in your brain, and I will talk with you later.